I wonder if the consensus trade upside potential is now done. It was the big gainer over the course of 2021 into 2022, but we've seen it come off steeply with energy prices overall. So are there buys now created by this dip in oil prices?
Good morning. Thanks for having me. So I think you're right. I think that there is still opportunity to make purchases in the energy space. From a valuation perspective, a lot of these names, E&Ps, even the integrateds like Exxon and Chevron, are trading at healthy discounts to historical forward average based on where we see 2023 results. And I think, you look at a WTI probably in the $90 per barrel range next year. I still think there's a lot of opportunity that these stocks are not fully discounting in yet.
All right, so we're looking at some charts right now. I mean, ExxonMobil is massively up. It's 60+% gains over the course of this year-to-date period. I guess the consensus has been now for a while that oil and gas is going to do well, given what oil prices have done since the lows in the pandemic back in the spring of 2020. If that's the case, though, you mentioned E&P, you mentioned some of the other parts, the integrated oil companies, oil services. Which ones are the most levered to oil prices? Which ones do we have to worry about when we see oil moving up or down?
Yeah, so E&Ps are going to be the ones that have the most direct exposure, either up or down, depending on what oil prices do. But keep in mind that, yes, energy is up a lot this year, but energy as a whole has been systematically underinvested in new supply for the better part of the last 7 years. I think we're on very early innings of a new upcycle in energy. And I think that there is going to be a pretty significant opportunity for oil prices to stay elevated, probably through the rest of this decade. The big wild card, if you will, is on the demand side, not on the supply side, I think.
Okay, so if that's the case, if your prediction is for oil prices to remain elevated over the medium to longer term, and then you told me that oil exploration and production companies are more levered to higher prices, that implies that that's where I want to be, upstream, so to speak, exploration and production. Where are the best bargains right now, given that thesis, at least?
Right. So on that thesis, you want names that do have that exposure to the upside. So take a name like a ConocoPhillips, for example, ticker COP. We have a buy opinion or 4 stars view on Conoco. They have an awful lot of oil that comes from Europe and overseas markets, more Brent linked than WTI linked. And as you know, unlike a lot of the U.S. shale players, which are, let's say 100% U.S. focused, Conoco has an awful lot of overseas exposure. Brent prices probably hold up better than WTI do. There's always that small premium between Brent and WTI. Or take a name like EOG Resources. We have a strong buy or 5 stars opinion on them. So those are some of the I guess the bigger E&P names that we like. Other names that we like that have pretty healthy dividends, and actually Conoco has a very strong dividend, mostly variable in 2022. But a similar name would be like a Pioneer Natural Resources, ticker PXD, also has very healthy variable dividend. You can probably get yield somewhere in the 10% range, which is pretty significant.